This is my weekly episode where I take a closer look at 4 stocks that are on my watch list for potential buys this week. Like many of you, I put money to work on a weekly basis trying to get my portfolio to grow. I'm either looking for new investments or old investments to increase my overall exposure. So for each stock today, I am going to take a closer look at some of the bullish reasons of why I'm looking to buy them. Before we go any further, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, my free Discord channel, my free tech channel, and so much more. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So 2 stocks that I'm going to take a closer look at today are ones I consider very strong growth. The first one is going to be Twilio, which is down over 78% from its all-time highs. The second one's going to be CrowdStrike, which is down over 37% from its all-time highs. The next 2 I want to say are somewhat growth value, where I do expect the market to be growing, but at the moment they are sitting at very attractive values due to their overall cash flows or the overall kind of market they're in. The first one is going to be PayPal, which is down 73% from its all-time highs. The second one is actually an ETF in the semiconductor market, SMH, which is down 28.36% from its all-time highs. But I do believe the semiconductor market has so much more growth to see right now that I'm really liking an overall ETF to focus on varieties of companies within that sector. If we take a closer look at all 3 companies, we can see all of them have a nice amount of cash and short-term investments right now, which is good during the kind of macroeconomics that we're seeing. I do want to say CrowdStrike and Twilio have very low debt compared to cash, which is what I like. PayPal does have a nice amount of debt compared to its cash, but if we take a closer look at PayPal from operations, this kind of eliminates a little bit of the fear with the debt in PayPal. CrowdStrike also has a nice amount of cash flow from operations. Unfortunately, Twilio doesn't. So I do want to say fundamentally they're all super strong. I do want to say my favorite is CrowdStrike with a nice amount of cash and short-term investments, very low debt, and positive in cash flow from operations. So now that we took a closer look at the top level numbers of each company, I want to take a closer look at why I'm bullish in each of them. And let's start off with PayPal. So the first thing is here in Apptopia. This was updated July 13th of 2022, and it talks about the top 10 finance and banking apps in the first half of this year. And we can see the number 1 most downloaded finance app in the first half of 2022 worldwide is PayPal with 49 million. So this alone shows the international strength that this company is seeing. Now if we take a look at the top 10 most downloaded finance apps in the first half of 2022 in the United States, number 1 is Cash App with 34 million, and remember that's owned by Square. Number 2 is PayPal at 17 million, and number 3 is Venmo with 13.4 million. So if you add those 2, that's roughly 30.4 million, which is not that far off from the number 1 position. So I do hear a lot of bearish points that, hey, PayPal is dead, but we continue to see it on the top charts, even here on the first half of 2022, both globally and domestic. A few other bullish things about PayPal, we can see total payment volume, which is very important for a company like this, is kind of on an uptrend. Obviously, there might be some quarters that do better than others, but overall, it is in a nice uptrend. Quarter 1 2022 was 323 billion. That was up compared to same time last year, and it was only beaten a little bit by quarter 4. But remember, quarter 4 deals with a lot of kind of holidays, so a lot of transaction happens during that time. The other things that we're seeing is active accounts is growing on a quarterly basis, and total transaction per active account is also increasing, and transactions are very important for PayPal. So we can see both growth in users and overall engagement, which again is bullish in the long term. So those are the reasons I enjoy PayPal right now. Let's take a closer look at CrowdStrike. CrowdStrike is a company that deals with cybersecurity, and we can see their subscription annual recurring revenue continues to go up on a quarterly basis. Look at this overall trend. Not only that, dollar-based retention rates are also 123.9%, and we can see for the past 2 to 3 years, benchmark has been above 120%. Not only that, this company also has strong cash generation. We can see first quarter free cash flow has grown 34% compared to the same time last year, and annual free cash flow grew about 51% in the fiscal year of 2022 compared to 2021. So I mean, CrowdStrike is a company that deals in a very emerging market, and it continues to be a leader. It continues to grow that annual recurring revenue, which is super impressive, and it is positive in cash flow from operations and free cash flow at the moment. Like we saw from its 52-week high, CrowdStrike is only down around 37.4%, but I do believe that just overall shows the strength that this company has, both financially and market-wise. The third company is Twilio. If we take a closer look at their most recent earnings, it pretty much tells you everything of why I'm bullish. First, we can see revenue continues to go up on a quarterly basis. It might not be growing as fast as it was before, but it's still strong double-digit growth. They have done a few acquisitions, so taking a closer look at organic revenue trend, we continue to see still that double-digit growth even without those acquisitions. Dollar-based net expansion for the past 2 years has been over 125%. Again, super bullish, and this is what you like to look for in software companies. The final company is obviously not an individual company, it's an ETF, and I do believe the semiconductor market is in a very kind of bullish long-term trend. Maybe in the short term we are seeing a bit of a hit due to consumer kind of maybe spending decreasing, and that's the main reason I actually wanted to take a closer look at an ETF. I normally focus on individual semiconductor companies, but I do believe at the same time it's also good to get exposure into various semiconductor stocks. Unfortunately, I don't want to buy them all, so I focus on this ETF called SMH, which is a VanEck ETF that focuses on 25 semiconductor companies. And this is one of the main reasons I like this ETF. The 25 semiconductor companies tells me it's a little bit more concentrated and I get a little bit more exposure in maybe some of the companies I'm very bullish on. Here we can see the top 10 holdings on average hold roughly 60% of the total portfolio. So again, that concentration is something I'm bullish in. Some of the top companies, for example, that I don't own in my portfolio are Texas Instrument, Intel, Broadcom, ASML, Analog Devices, KLA, and again, all of these do have some form of bullish trend in the semiconductor market that we're in right now, but unfortunately I do not own them, so I'd rather just purchase them through this ETF. Another thing, the overall net expense ratio is about 0.35%. Obviously it's not the cheapest in ETF. Most can probably go with the index ETF with less than 0.5%, but a net expense ratio for a kind of more market specific of 0.35 I don't think is the worst deal. And if we take a closer look at total return for SMH, it has outperformed the S&P 500 and the Qs. I do believe the needs for semiconductors continue to grow, so I still am very bullish in this market. And I do believe in the next 10 years, the semiconductor sector can still outperform the market. So these are the 4 stocks I'm looking to buy this week. I hope you enjoy it. Take care, have a good day, and see you next time.